announcements that are going out. I think Tregs is on the way to Solana Crossroads, and yeah, be joining while he is on the flight. Anyways, let me just go through this. Mm,
Hey Nas, I'm audible.
yes, you.
All right.
All right. It's a stacked Monday call, and it is being recorded for other people to listen through. So yeah, the things that we're gonna go over today are there are 9 things listed on my screen. Uh, the first thing is the Futaki commandments, basically the governance commandments that we're gonna follow as we start with the proposals through Futaki governance. And the second thing we're gonna go today is through the margin engine V2 and its design, coupled with the pricing engine that we would be hopefully having it up in the few weeks using Magic Blocks engine, which would allow us to post pricing updates at much faster rates. And the next thing is the details about the token launch and a transparency report that we would be sharing with the community to show all the detailed transactions that we have done so far in regards to the token distribution and token allocations. And then we'll follow up with the improvements that we are hoping to add on to the SLTP execution regarding the problems that we have seen with the transactions landing bit slow, which we've added the details in the documentation as well, where we right now, because of the systems, we require about 15 to 20 seconds of the price action to be that specific price that you have said, but we have some interesting improvements in that direction. And following up would be about the feedback loops that we want to create with our community and coming up some UI updates along with some addition of new assets. But with further ado, let me start the conversation with the Futaki commandments. Let me share my screen. I think that is the best way to go over these, and let me, yeah, just some more applications. I think, yeah, that should be enough, probably. So I hope my screen is visible.
Yes. Yes.
All right. So we use Notion for all of our stuff, and yeah, you might be seeing some of the stuff on the side, but yeah, coming to the commandments. So this is like the framework that we are putting up whenever a proposal is put up by the team, and we are aiming to have a strict sort of uh, criteria listed out here, which we would follow when any of the proposals are gonna coming up on the Futaki markets regarding Flash's growth and any new product development, which would eventually have some token inflation or not, depending on all the stuff. So yeah, any proposal first of all need to state the impact on the token value exactly, where basically it will share how the product that we would be shipping would create value, and with that value what amount of dilution of tokens would be respectable. And the second thing is when we launch these products, we also need to share defined metrics that share how effectively the product would grow the protocol and get us more usage, and yeah, evaluate the success post implementation. And we also need to clearly include the opportunity cost, which basically requires the amount of team hours that are put into deploy these things, because at the end of the day, it's the humans that are working behind the scene to develop the stuff. And since everything is built from scratch, it actually takes a lot of hours, and it's all done in house. And then the next thing is, yeah, we will have a broad strategic goal why we are doing all this stuff, and it is all about growing the brand and creating more value for the users is actually the strategic goal since day one. And that is what we have strived to at least deliver. I hope we are able to do that. And then also adding an post implementation review, which would be done once the product or the feature goes live. So we would be adding this into the documentation. And since everyone is following my screen and are live, if you have any questions regarding that or any improvements, we have almost a week from here to have those things reviewed. We would be sharing this notion, and I think it's better if we add into a documentation. And then once things are tidied up, then we would have these things set in stone as if, and follow up all the governance proposals in that direction. So yeah, we're up
Yeah.
for any questions on this. Yes, sir.
Yeah, while we have a look at the chat to see more questions coming in, the whole idea with commandments here is to put that put the perspective of how we look at governance, Futaki governance in place. And the number one idea that we've had with the commandments is to make sure that we retain the value that we've had while building Flash all along, and we represent the same values moving forward by putting up these commandments and making sure that every idea that's put into work is evaluated, is weighted for its impact, and all of that kind of comes back to the idea of how valuable would that addition be to the protocol and to the token in perspective. So that's the thing which these commandments make sure that any proposal that's being put on the governance forum is not just a slight change in implementations or things that are not um, really understood by community in terms of the impact. So the idea here is to open up the governance in a very con- consolidated way, where we are conservative in the start, and as we proceed further, these commandments are the ones that will guide the whole creation and execution of proposals in the governance forum, and these would remain in place. So the idea here is to make sure we align ourselves, right, and the incentive of the community together and work on ideas that are truly valuable at the end of the day. And that's where the commandments would be set in stone and guide the way we would operate.
I'd want to add one last thing, and that's like there's also just accountability across the whole stack. These review periods that'll happen like after a proposal is passed, and then we review it 6 months. Like, well, how effective was that? Did we, were we completely off the mark in our projections? And also, what kind of lessons can we take from it? I think is going to be very key for helping Flash not only kind of make the right moves, but also just be held accountable for in the future.
All right. I am just waiting if we have any questions regarding the commandments. And as I said, we'll have a week to review before things are set. But yeah, nonetheless, I am unable to get. Hopefully, people are able to message here in the Flash stage. Let me know if that's not the case. But yeah. All right. Yeah. Thanks, Tom, for confirming. Uh, Next up would be the Margin Engine V2 deep dive before we go into the transparency report. So if you want to take it from there.
Yeah, for sure. Um, let me I can get that. Okay. Okay. I don't have that authentication. No worries. I'll just walk through those. And the idea with margin engine improvements is to make sure um, we are suitable for a wider variety of audience in terms of traders. And one of the biggest troubles we have had is the idea of fees, and one of the biggest bottlenecks for perpetual DEX with Oracle-based asset-backed perpetuals offering is how we handle margin fees. How do we handle positions that remain open for a longer period of time, which are taking up or utilizing the pool's assets, and by the virtue of which they're supposed to pay back the LPs corresponding fees. And that's been one of the biggest troubles in terms of scaling the protocol. And even if you look at Jupiter, the amount of volumes that they're able to serve with such a high TVL is always going to be limited by the assets that the pool holds. And margin fees are, in a way, penalizing people who hold a certain position for a longer time. So, in by the virtue of assets in the pool being used up, the pool has a strong long bias. All of the volumes that we've got, or most of it, are attributed to people longing against the pool, and that just goes around the idea of the market sentiment being aligned, and that's where we've had this urge to incentivize balanced OIs. And the whole idea of FLP or liquidity pools being um, a better source of exposure to the underlying price index is the idea that if you're able to kind of get the same price exposure while retaining a balanced OI against the pool, means that would be a great return, or risk adjusted return for LPs. And that's where balancing opposite OIs, which is natively which is natively implemented for order book based exchange, is what's to be replicated for the margin engine V2 to be successful. And in order to have those things imbibed into design, what we have learned from GMX operating in the space for such a long time, and other pool to peer Oracle based perpetual exchanges, is that there has to be an incentive for opposite parties to kind of stay exposed to the pool for a longer time. And that's where the idea of funding has always been an interesting scope, which kind of helps derivative protocols to kind of align the price with spot. And with this idea, what pool to peer exchanges have done is to incentivize or pay funding to the side that's less skewed. So it's not traditional funding in its own space, but the whole idea of paying out a funding fee instead of charging a time-based margin fee to traders is what would incentivize people to kind of take the opposite end, which takes away the risk of the pool. So net exposure against the pool is retained for the underlying index, which means all the returns that LPs would get is now risk-free in the most ideal case. And that's where the whole idea of if that is the case, then any amount of volume that's executed against the pool is pure yield for LPs. And in case of a well-balanced OI pool, the LPs have the best yield against the lowest risk that they're taking against the pool. And for that, there is a bit of a change in how the whole margin fee accounting works. And that's where we've got unified pools of assets. Like pool one offers a particular set of assets, pool three, pool four, so on. And those idea that each pool has an index or follows or needs to outperform the underlying index is where the margin engine V2's unique way of awarding the less skewed the spectrum of open interest kind of helps incentivize and takes away the unhinged exposure that the LPs have to one side, which is mostly long in this case. And what this ends up doing is reduce or kind of eliminate the idea of the pool gaining upside when the markets are doing good. for the underlying assets. And margin engine V2 improves this idea of you retaining exposure to the index while making or kind of having exposure to the yield, which comes from all of the positions and heavier volumes, which kind of come in due to lower fees and the prospect of deploying delta neutral strategies, which are capable of giving you a payout. And that's where the whole improvement is ideated towards, and that's what the next improvement in terms of the underlying design is poised to be.
Yeah. Yes, Megalex is asking about having a 20x Coinbase or Robinhood long wave flash trade. Yes, totally. The way we are working on the margin engine V2 would allow us to list such assets, such risky assets that are backed by USD pools only, and that is the main direction of building a pool that could serve, just a minute, that could serve things for different assets, and yeah.
Yeah, coming back to virtual assets, one of the biggest reasons for us to kind of improve the underlying margin engine is the unique insights we have had with Pool 2, which offers commodities and forex trades right now, commodities in particular metals right now. And that's where we can expand the asset offering. But one of the biggest troubles for us have been when we have assets like Base or Robinhood in this idea of equity being tradable on Solana. RWAs haven't really caught up, so you don't see them being tokenized or tokenized in the right way. And one of the biggest troubles there is the pool is literally exposed to bidirectional risks, where any appreciation or appreciation for longs, the positive PNL would need to be settled against USDC or a stablecoin, which is the major chunk of the pool. And one of the biggest risks with such a system is this idea of having a 24/7 oracle, which is not the case for equities in most part. And sourcing the price feeds and operating the pool against the boundaries of such events, like be it a daily close or weekly closes or earning calls, which are kind of well, or special volatile events, which kind of end up exposing the pool to a lot more undue risk, which the LPs might not be aware of, because LPs do not have any associated um, uh, earmarking tools. Like let's say they don't even have a stop loss kind of a deal, because that's where an active trader would be able to hedge his losses, but not the LPs. And that's where there are a lot of ideas that we've worked on in terms of limiting the risk, including auto deleveraging, and all of those options kind of ended up with same trouble, that there's no way where a system like that would be meaningful to trade on unless the fees are extremely high, which kind of disincentivizes any trade. So in order to overcome that, again, Margin Engine V2 kind of works in the same direction of incentivizing a balanced OI, which eventually reduces the ultimate risk that LPs are taking on, which kind of enables us to play around this idea of listing all of these assets, which are virtual, and without having the need to kind of strictly have a tokenized version of those on chain, and thus expanding the horizon, similar to how we've seen Gains network kind of operate over time. And of late, we've seen Ostium and a few good protocols on the EVM side kind of work on those ideas, where balanced OI are the primary target of kind of achieving this reduced risk on the LP side. And that's what is opened up by Margin Engine V2 improvements coming in, which kind of allow us to move away from this strict idea of having everything asset backed, which kind of pays just a static margin fee and doesn't really incentivize LPs to kind of remain or kind of have their risks hedged.
Yep. But yeah, the engine V2 is very exciting to work on because it actually allows us to list any asset as long as there is an feed for it. Probably have our own feeds if there is no pet feed. So that is a very interesting addition. Uh, but about any timelines, because people have been, we don't want to give timelines, but just an optimistic direction, what we could say would be something around next month we could have a DevNet about it. Yes, sir.
For sure. The timelines that we have put out is a week for all of the design to be finalized, as something that we've been working on for so long, taking all the feedback um, from all of the protocols around. Ostium, one of the best of late, which has got a lot of traction, and that's the whole idea here, where Pool 2 has been right here from day one, but it's practically just a disposition of this idea that, okay, we can trade any asset on Flash with the underlying design mechanics, and it's just the point of saying we need to improve on a particular set of metrics in order for the pool to be scalable, and that's what Pool 2 has been proving all along, that okay, we can support assets, even people trading gold on Pool 2. um, we're able to offer the idea of, trading commodities and trading forex um, with respectable leverage, and that's the design that facilitated it for now. And now that we look to improve or kind of expand the offerings that we've got, margin engine improvement are necessary or quintessential in order to get that done. And that's where we are. A week from now, we should be looking good to have a quick DevNet round of seeing how the margin engine performs, because it's homogeneous. Any improvements that come along for pool 2 or USD backed pool kind of apply towards how we could incentivize better OI balance for other pools as well. So it kind of improves the overall spectrum of offerings that we've got, and helps us even reduce fees further, incentivizing more volumes, and that's where we'll have incentive for LPs to kind of come in.
For sure. Yeah, moving ahead with the token transparency report, which I've shared the notion, and we'll be probably adding the link of it in our documentation, which would be updated as other allocations are put up for vesting. So yeah, this documentation includes all the transactions that we did leading up to the token launch, and then the distribution to the community, and the liquidity provision and the advisory allocation as such. And right now, the only biggest stake that is to be set up is the incubation vesting schedule. We are just waiting for the addresses to be shared, and that would be done probably this week, and then this report would be fixed. So yeah, anyone can go through the report I've shared in the messages, and I'll also put up the link in our documentation. And all the transactions are also available to be, checked through. And we really wanted to be as transparent as possible. So yeah, the report is there. And yeah, again, the
How is
piece.
got a
Okay,
question in the chat
all right.
alongside that, where Holtz asks, how is booster deal calculated and rewarded for FLP? Is the booster deal applied only on SFLP? The answer is yes. Booster deals only apply for SFLP, because booster deals being tokenized is something we've had technical limitations on. So unless you're staking exclusively, there's no way for us to reward you a higher fee share, and that's where boosted yields are still limited to SFLP. And then FLP holders receive the baseline 70% of all fees accrued to the pool. And the computation is straight up just a simple addition. So it's not 2% of the base yield. Whatever percentage you see in terms of the boost, that's you just need to add up to the underlying base value, and that's how you get your final fee share from the pool.
Yep. I think Short C is typing something. I'll just wait for him. Okay, I don't think there is. But yeah, the space is open for questions as we go through the things that we have to cover for this call. There are still a lot more details that we are going through. Yep, that's an interesting question. Any hints about spot limit orders and DCA discounts? So, yeah, as we said, we are in the process of working on our own aggregator, and the limit orders slash DCA discounts would go live when we have the aggregator added. And then when you open the positions, limit orders, then according to the fab that you have staked, you'd get the discounts, is the plan. And the idea is all about offering the cheapest limit orders and DC option in the ecosystem. Same as the open close fees that we have right now and the yield share.
Rain's question on what happened to ranking moved down too low just now. News for all of the audience here. We've initiated the VP accrual for FLP holders. So if you are an FLP holder, you would now be earning your rewards in proportion to how SFLP accrues yield. So FLP yield, which was collected over the past 24 hours, is snapshotted and distributed to all the holders each day. So FLP holders are now eligible for VP rewards. That's one of the things that we are about to announce, and that's why you would be seeing a lot more proactive VP accrual design, and that's the whole idea. VP is not something that you get just stuck up. It is a dynamic thing, which is you've got to keep up, and that's how VP accrual kind of incentivizes active usage of the platform, and also for LPs who've been passive are now also rewarded for the stake.
All right. The next
Also,
thing.
another thing about feedback loop from Rain was the idea of retaining rebates for people who've staked. And this is where it's an interesting dynamic and something we would love to improve in the future. And one of the straight limitations with discounts and rebates is this exploitative self-referral loop, where it's not just the same wallet, but anyone referring themselves from anonymous wallets and taking up both the discount and rebate. And for that, we would have to kind of adjust our discounts, which would not then be the best in class. And for that thing, we've got some ideas on how we could better design the dynamics to kind of have both things retained, where you get your rebates for anyone who've now staked, and at a specific tier for discounts, while kind of retaining your original rebates. And that's the idea. We've had to stick to this in order to kind of have a transition over from the original design of rebates for beasts, where self referrals would apply for people holding beasts, where they get the discounts. And now the system is kind of is here to be improved, and we'll be looking at ways to kind of retain rebates even for people who now kind of go on to stake. And that's one of the improvements we have taken from the discussion, and yeah, we'll have that put in.
Yep. Moving ahead, I think Zeb, we'll go over through the improvements on SLTP execution that we have discussed and would be following up with it going live soon. I think I don't have the documentation for it, but would it be too complex to go over it on the call?
Go over the VP accrual for FLP holders, you mean?
No, the SLTP execution.
Yeah, improving SLTP mechanics. The idea here is to, based on retroactive analysis and community feedback, we've noticed stop loss and take profit orders kind of lagging in terms of the absolute speed of execution, where there are sometimes wicks which don't last even one full cycle of discrete snapshots. So the way price oracles work on Solana right now is that you're able to do at most one per slot, assuming zero slot latency in terms of landing your transactions. So a realistic latency right now is like 2 to 2.5 seconds. So that's like one per leader slot, which is 1.5 seconds. So in order to kind of get around this idea of republishing a price update every slot, and then 4 slots calling for a leader schedule. Now, once in 4 slot is the best bet that we can offer. So in order to kind of get the price in, the discrete frequency that we have got is like once in 2 seconds. So if the price move is to be kind of relayed by Pyth, aggregated, and then being sent on chain, it takes around that time, like between 1.5 to 2 seconds in order to be available. And then if your order, or if the price which is reported in that interval fails to catch the exact price move that your stop loss should have executed at, we have no chance in order to kind of go and replay the price move once the oracles move forward. So what ends up happening is there are sometimes wicks created on the chart which were not reported back on chain. This has created a lot of bad experience for trigger based SLTP and limit orders for most part. And one way of improving those is to make sure we have a strong order of precedence. So there are 2 ways to improve. Number one is guaranteeing a price, and number two is guaranteeing order of execution. So if there is a liquidation that needs to go in, then if a stop loss has been set already, then we can have a preferential settlement of the stop loss before we go ahead and liquidate a position. So which kind of takes up a technical change in the program architecture to kind of make sure that stop losses are validated before liquidation goes in. And on the same note, if someone had a limit order placed to execute before they getting liquidated, or based on the precedence of price, if there's a limit order that needs to get in, the biggest trouble has been liquidation prices kind of climb up as you have margin fee accrued to your position. So in that case, there are cases where your set stop loss is way beyond the liquidation price, and in that case, the position is insolvent even before your stop loss price kind of comes into effect. And in order to improve all of those, 2 things that we would improve on our stop loss and take profit execution is to have a price guarantee of the order that you're putting in, and then have the strict order of precedence to kind of have your trigger orders, stop losses and take profits kind of come in before a liquidation is to be triggered, so that you could say if your position or kind of a partial position is to be closed using a stop loss instead of liquidating it all. And then a major improvement on that front would also be to kind of improve liquidation thresholds to match the best in market offering elsewhere. And that's where we're in the process of improving or increasing the leverage threshold, or kind of reducing the maintenance margin thresholds to 20 bips. That's liquidating at 500x instead of the current 1%, which is current 50 bips, which is 200x on Sol, BTC, and ETH. So we'll be coming out with the improved maintenance margin thresholds and the whole improvement to how SLTPs are executed. We'll be announcing that tomorrow on how the improvements going to come up.
For sure. Mm,
Going through questions.
Yeah.
Traders should have higher points in VP. For sure. I mean, today's bump is more because FLP holders have been awarded the VP since the start of the epoch, so it's quite a bump. And in general, we've had the clear idea of how VPs accrued for traders and LPs in accordance to the multipliers that we've set. You can find those in documentation. And then if you are to improve the VP accruals for traders, then yeah, the feedback's open to kind of increase the value that we award for volume that traders to kind of execute, or rebates that a referrer would earn. So yeah, it's all open to feedback. And then yeah, we'll be reevaluating it as we reach the end of this epoch, which is the first one. And then yeah, we'll be experimenting with a lot more dynamic values for all of the ways to accrue VP. I would like to see it activates a market order even if it's lower. Yes, if your stop loss is lower than your liquidation price, if you're long, then yes, it would be a market order to close your stop loss, because price guarantee could not be, or price guarantee is a guarantee of executing your stop loss in its own form. If your position is to be liquidated due to a volatile price move, there's no way for us to kind of reverting that particular move in terms of how whole Oracle systems work. So you would be getting executed at the market price, and then if there's no liquidation, you would still have your price guarantee intact, and that's just how systems are designed at this moment. And yeah, we'll be sharing more details and improving that as we get it out in prod.
I think the next question. So does Margin Engine V2 include magic blocks, or they are separate releases? Is an important question.
Separate releases for sure, because Magic Block improves the pricing engine as a first, which is what we've been working on. And the biggest trouble with moving the whole margin engine to Magic Blocks is the idea of systems being production ready. We've seen a lot of performance improvements and a lot of great stuff with Magic Blocks coming into picture, but this idea of having an ephemeral rollup take most of the computational load is still nascent, because this thing of validators kind of running more or less a trusted execution environment where there's a lot more to be done in terms of fraud proofs, and the overall system of us moving away or maintaining both deals, like people who come with assets on mainnet, and then we're able to instantly kind of lock up liquidity here and then open up a position, move the computation to an ER and execute the whole system as if it was instantaneous and executed on mainnet. That requires moving a lot of accounts. And since we're restricted by transaction size in terms of how much data could be updated in a single instance or a single transaction, we are limited to what parts of the whole engine could be moved to and fro between between mainnet state and the ER state. So that's one of the most limiting factors in terms of how Magic Blocks engine is structured. And we've been working on ways to improvise our own design, or kind of breaking down the state into smaller chunks so that it's more manageable or movable across the ER and mainnet. And in a similar way, move a lot of computational load from from users sending a transaction directly to mainnet versus kind of just using a specialized RPC to request all updates over an ER. And that's where it's an improving landscape, and moving margin engine improvements altogether would be too big of a change to revert. And in that case, like Magic Blocks is the best idea with Magic Blocks scalable ephemeral rollup architecture is that if anything goes wrong with the ER, or if there's anything that doesn't seem right in its own sense, you are able to revert back to mainnet. You would be able to use the protocol on mainnet as you're using right now without any hindrance. So this ability of us kind of reverting back to mainnet for ultimate source of truth is what makes this whole idea the most valuable resource. And that's where I think the eventual migration to ephemeral rollups would take a lot more due diligence in the form of rigorous testing and the ability to kind of move to and fro between states. And it requires a bit more, a slightly better transaction delivery design on how ephemeral rollups work right now, and potentially an increase in transaction size again.
Great. Mm, correct. Apart from that, next steps that are coming into play is a lot more UI updates, which would basically allow you to see a better breakdown of your VP accrued, followed by improvements on the whole UI UX, which would allow you to have your confirmations right away. So we are also working on a new wallet integration using Privy, which would allow you to have your own Flash account and trade without confirmations. Pretty similar to what you do on centralized exchanges and the whole experience of Hyperliquid itself, where you just click once and your order is filled. So we are also working on the UI side to improve the experiences with just one click. And on the direction of adding more new assets, I think this week we would be up with Fartcoin, followed by the conversation is around adding e-mini features, which would allow you to trade S&P 500 and oil. We are still going through the risk analysis for them to be added on the pool too, and hopefully we'll have clear answers on that. So the idea is to add these two assets, and then hopefully once we have margin engine v2, that will obviously open up the whole horizon of adding whole lot of assets on Flash. The next thing is about the feedback loops from the community that we really want to have an open conversation with all of the folks who are with us and the Flash Discord and or on Twitter as well. So the feedback that you give us really helps us to improve on the service that we provide, and we are here to improve your experience on-chain trading. And if we have honest and open conversations, then we are all up for it in the Discord and anywhere else, so that the product improves and the valuation of the protocol also improves along with that. Mm, have your LP get you, please. Okay. Any other questions regarding stuff that we've been going through? We would be happy to answer them. When VP points for loop scale, I'm gonna tag Frost on it. Frost just added the VP for LP positions of FLP, but yeah, I think Frost would be the best one to answer. But
Calvin's question: you guys working on the P&L to include open fees? Yep, we've had a few improvements on how best we would be able to kind of match up P&L according to what the user pays. Because right now, one of the biggest things that we have had as a hindrance was um, the idea of allowing people to open trades with any of the matching assets on a given pool, which includes a little bit of a swap fee in order to facilitate the trade mechanic. And on that front, including open fees, also sometimes carries a volatility-based fee depending on how volatile the markets are. So we would be showing a full breakdown to help you kind of better allocate or better understand your current P&L settled against your original collateral amounts. So yeah, we've got some improvements on that front, and we'll be making adjustments to the UI to show that in the best possible way.
Great news. And if anyone wants to join us on the stage and have any questions that we can follow up one-on-one, the stage, we can have you added up here as well. And yeah,
Jotsi, retrospectively, yes, retrospective rewards, similar to how VP accruals worked for FLP holders in general. That's how we wish to kind of have that allocated for loop scale. And again, this is not going to be a repetitive addition. It's more on the lines of redistributing the VP accrued to holders. So right now, the loop scale vault is the beneficiary of VPs allocated for FLP holding in general. So yeah, the vault is one of the holders right now, and that VP is going to be redistributed amongst individual depositors or users of the loop scale vault. Interesting takes by Rain. Do let us know how best we can improve or better take care of our traders. And yeah, happy to have all of the feedback. Feel free to come onto the stage, and be happy to have you.
for sure. Like we are working on things to improve and would love more. You have read my message. Yeah, everyone on the team is reading the messages in your Discord and
Yeah.
are actively working on adding those features.
Alkenes, yeah. If someone can relay that back to Alkene in the group as well, yeah, it's all going to be retroactive for sure.
For loop scale as well, sir,
Yeah, for loop scale.
we don't have a look back for. You can just reply to him in the beast chat.
Yeah.
And yeah, I think that's about it for today's call. We did go through a lot of things quite fast. Listen, be point. Yeah. Yes. The point system, all points to LPs. Certainly, we can reconsider the point system by checking how the distribution has done. We would be going through it tomorrow or day after tomorrow, and we'll hopefully try to increase the share of points that are given to traders because we want a better distribution of voltage points. So yeah, we will look into that. But it's certainly not all the points to LPs is what I do want to assure you. It might look in that direction, but please announce before the next book. All right, for sure.
Yeah, I think traders still get like quite a bit more than any LPs. Traders are the life and blood of Flash, so it is
Yeah,
reflected that way.
because
It's just as one day is pretty jarring.
yeah, because the LPs don't get a VP just like that. They have to earn that amount of fees to get the VP. So it's not that you just provide $10 million worth of liquidity and you suddenly become the number one VP earner. It also is about getting the amount of fees, and on the amount of fees is where you get the VP collected on. So there is the system on that. Yes, certainly. I'm just waiting for the folks typing out in the chat. Yeah, that's an interesting question from Tom. Yeah, the price action of FAF. To be honest, it hasn't performed well. I think it partly due to the distribution that we have and the whole sort of expectations of what you get from an airdrop from the previous experience. I believe it's the way that it has been where people sort of have this mindset that of okay, if you use something, then you might get an exit or some kind of huge dollar attached to it. But the way I'm sure the people who have been following Flash from day one have seen what we have done, and I certainly believe that the price action that we are seeing is not reflective of what is to come or what is live as well.
Yeah, I mean, I think when approaching CG, we very much viewed it as a let's get as many people in this community as possible. And even though like price action, it's not the greatest to feel right now, what it does mean is that like any new person who gets involved and is enjoying Flash does get I would say an attractive entry for all that is going to be offered. Especially when we are explicitly kind of showing the route to revenue share and very much attaching a token to what the team's success. Even making the team earn the token itself is this kind of a lot of things that haven't been done before. It's taking a lot to digest. I mean, even just looking around the community right now, um, I don't know how many of them kind of understand Futarchy and its implications with respect to like anything that mints tokens. It's like we still need, it's going to be some learning, but I think after all is said and done, it'll prove like, oh wow, like the token one has upside to the whole team. It's anyone can kind of buy it, participate in it, express their opinion in the markets as to like which direction the team should kind of be building towards. And I think it's a very powerful potential that it's like barely been tapped yet, and we'll kind of see it play out in the next few years. And yeah, excited to see that happen.
For sure. Hmm, certainly. Any other questions from the audience? Because we have a team call right after this. Basically, the daily stand up that we do. With, all right, I think this pretty much wraps up stuff. And yeah, we are here in the Discord to answer any other questions and certainly work on the improvements that are needed to grow the community and the brand itself. Hopefully, yeah, things will turn out for the best. And yeah, have a great day ahead of you guys. Goodbye.
Let's catch up.
Yep.